The economic phenomenon known as inflation is something that has gotten a bad rap due to the circumstances where it is at a higher than healthier rate at this current point in time. Most of the time, by the time you hear about inflation, it's usually going to be at a time where it's a problem. You're not going to hear almost anything about inflation when it's at its healthy rate and functioning like it's supposed to be functioning within the economy. And because of that reason, inflation has a very bad reputation. So many people are starting to ask, who have now educated themselves on the concept that inflation is a thing at all and that it's typically damaging to their financial position. Many people are asking why the Federal Reserve makes a conscious effort to intentionally keep positive inflation in the mix of our economy, meaning the Federal Reserve intentionally wants inflation above 0% at all times. Why does the Federal Reserve not want inflation at 0%? Why, believe it or not, do you not want inflation at 0%? I'm going to cover that in this video. This is JP from Blueprint for Prosperity Network. We're going to get right into it. So there's two major reasons why the Federal Reserve is adamant about keeping inflation baked into our economy. The primary reason, or at least reason number one, is that there's a lot of studies and research that shows, and other examples around the world that shows, that a flat economy is actually detrimental long term. Flat meaning that there's no inflation or no significant inflation in the economy. When that happens, there's data out there, studies and live examples around the world and other economies that have demonstrated that this is unhealthy long term for the economy. You have this basic stagnation. You have a lack of growth in GDP, gross domestic product. When you have that baked into the system, you get some short-term benefits. You get fixed price stability, and you also get fixed unemployment and usually lower unemployment. So in the short term, to some degree, there's perks. But in the longer duration, there's just a stunt in growth in the economy. And when there's a stunt in growth in the economy, then there's not wealth growing. There's not an economic evolution or, continual growth of the economy. That's the primary, reason on the surface. The next major reason that the Federal Reserve keeps inflation at some level, 2% range. Economic recessions and downturns are a natural baked-in part of our economic system. It just comes in its own ebbs and flows. With that being the case, the Federal Reserve needs breathing room to be able to drop interest rates to stimulate the economy when these natural economic downturns come around. So if the Federal Reserve kept inflation at 0, that means the Fed's fund rate also needs to be somewhere around 0. If the economy were to start to plummet or tank or slow dramatically, i.e. something like COVID comes along, or a war breaks out somewhere in the world and has a rippling effect on our economy, and something unexpected comes along to demand the need for stimulation in our economy to keep it going, that means the Federal Reserve would have to literally drop rates into negative territory, which is a whole nother beast in itself. The Federal Reserve needs the ability to be able to make money cheap, to borrow and to pump more money in the system at any given time if it needs to stimulate the economy. So those are the two major reasons why the Federal Reserve actually strives to keep inflation in our economy, even though it's eroding our purchasing power bit by bit. I'm gonna give you a couple quick scenarios why you as an investor and why you even as a borrower need inflation in the economy as well in certain instances. As an investor, inflation is the major ingredient in appreciation in assets. Not the only factor, but it is one of the primary factors that drives growth in assets, real estate, stocks, collectibles, and all kind of other, precious metals. All of these things tend to benefit at some point in time over the long haul from inflation. So if you're an investor, we need some level of inflation in order for assets to grow and appreciate. That is number one as an investor. as a borrower, one of the best examples of why inflation is actually a plus, and you do want some of it in the economy, is if you have fixed rate debt on a valuable asset and have inflation. This one may be a little complex for those of you who are new, so try to follow me here. Let's just say you have a 30-year fixed mortgage on a valuable piece of property. And that mortgage is at, we'll just say 6%. It's fixed for 30 years. Inflation is at whatever, 3, 4%, 5%. You are paying back a debt on a valuable asset that with less valuable dollars on an asset that is inflating. We'll say that again. You are basically paying off debt on an asset that is inflating in value with less, with eroding currency or purchasing power, like a dollar that is less valuable. So that basically means that you are able to pay off an asset that's growing in value while not having to pay more to pay it off. So you're paying that mortgage company the same payment, that same interest rate, even though the money you're giving them is less valuable over time. That's a hack for you as a borrower, especially a homeowner. It's like a fixed rate homeowner or a rental investor, short-term, long-term rental investor. You are paying down on a mortgage on a fixed interest rate that is there. You're paying it with a currency that's less value. So you're getting rid of something that's losing value and paying off something that's gaining value. Hopefully that was a better analogy or made more sense for you. So we need inflation. Believe it or not, we need inflation. So position yourself on the right side of the economy when these economic, cycles come along. Inflation is one of those things that will naturally at some point in time rear its head and get a bit out of control. If you own assets and own the right types of businesses, inflation is your friend. Inflation is your friend. And so it's just like I teach you and I've told you in different videos, when the Federal Reserve raises rates, yes, it compresses your ability to buy, a house or real estate. It has its negative. If you're in debt, it puts pressure on you in debt. But if you have cash, it does wonders for you in deposit accounts. So it's all about knowing where to put your money based on the economic cycle we're in. There's always wealth to be built. There's always money to be made. You just need to have the education to know where to put your money. So thank y'all for tuning in. I hope this was valuable for you. Drop your comments down below and let me know what you think about this, breakdown on inflation. So you hopefully this was a better explanation and gives you understanding and why we need it and why it's something that you need to learn enough about so you can know how to navigate it to make wealth, to build your wealth. So please drop your comments down below, drop questions down below. To all my pioneers out there, I want you to stay focused, stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.